Hello, everybody. Welcome to the show. This is Trading with Livevol. My name is Stephen Choi, and this is where I trade my own Reg T account, and I use LVX to do it. So lot has been happening the past few days. I think I might as well just talk about stuff that's most important right now to my account anyway. So I want to talk to you guys about Shire. So when we left off on Friday, I was telling you about the whole roller coaster with my whole account, and so I was trying to buy some puts, and I was trying to do some kind of ratio spread, and then over the weekend, basically, I read an article that said that Shire was willing to sell for around 53 pounds, right? Which was kind of surprising to me a little bit, just because I kind of was thinking that Shire was being forced to talk to ADV, that they didn't want to sell. So I thought they were going to go in and say like, hey, we want at least like north of 55 pounds. The fact that it was so low, 53 pounds, and AbbVie already offered 51.15 pounds, basically made it almost like that the deal was going to get done. So as soon as I read that article, I was thinking maybe it might be good to do a butterfly, the July 250, 260, 270 butterfly, and when I priced it out, it was around 250. This morning when I came in, I had to actually do it for 350. So let me see if I can actually see it here. Yeah, you see these. So I paid $6.89 for the 250, 87 cents, and I sold the 60s for 188 for a total of 350. So I did that trade this morning because I think it's going to get pinned. And the reason I did that was if you do the 360, 350, 360, 370 call spread, butterfly, your max gain is at 260, right? Because you're shorting that contract. So whenever you guys do any kind of trading, basically whichever strike you're short, that's pretty much going to be your max gain, especially on spreads. Not if you just sell stuff naked, but basically if you do some kind of spread, your max gain is wherever your short strike is, right? That's kind of a good general way to go about it. So the 260, my thinking was I was going to invest 250, and if it goes to 260, basically I'll triple my money by week's end on whatever I trade. In this instance, looks like I'm going to double if it goes to 260. So it's still iffy. Now I did pay 350, so my break even is 250, 350. Sorry about that. 250, 350, and then we'll see what happens. So there's a couple of things I want to talk to you guys about this trade. Like, it looks really confusing, but it's not really that confusing, right? Basically, I pretty much all tied up to 250, and all I have is the 250, 260, 270 butterfly 40 by 80 times, right? 40 by 80 by 40. So just to kind of try to cover everything, I'm going to talk to you guys about what I'm doing, right? But I think I actually forgot to give you guys my update. So today I'm having a pretty good day. Now, when I originally put on this Shire butterfly, basically my day trading was down $6,000. So it's not something that you would do unless you were very, very sure of what was going to happen. So like as the day went, my trading P&L got better and better, because I think people start realizing like you don't want to own these 60 calls, right? They're like death. So I think you want to sell these, and what I'm doing is I'm selling 2 of these to essentially buy the 250s, and I think that Shire is going to go to 260, right? So there's a couple of things. So the new deal values the company at 53 billion, right? 53 pounds. So I just kind of, before it wasn't as important, but it's more important to actually do all this stuff. And maybe I need a calculator. Okay, so basically, what the deal is that they're gonna pay 22 pounds per share, right? And get 0.896 of AbbVie share per Shire share, right? Per share, right? So for those of you guys who actually don't know this, you can actually, if you look at this price versus the where it's traded on home in London, it's different, right? Basically, the ADR is 3 times whatever the trading in England is, right? So you just multiply it by 3 times. So if it's 24.22 pounds, 24.22, right? You multiply that by 3 times, right? Because it's the ADR is 3 times the regular, and then you multiply that by the exchange rate, which is 711. Oh, actually, 72.66. Hold on, 72.66 times 1 point. Times 1.708. Darn it. Bear with me here. We'll get it right. Okay. So basically $124 is going to be in cash, right? 124.1. Now, this thing is going to fluctuate as the rates fluctuate, and for any of you guys who've done this before, basically it's not set in stone, right? So as the rates fluctuate, you can really have good or bad effects upon it. But since all these expire in like 3 or 4 days, I don't really have to worry about the exchange rate too much, right? Also, the AbbVie conversion. So let's actually see what AbbVie trades right now. It trades 54.60, right? So that's 54.6. You multiply that by 3 times, and then you multiply that by the exchange rate, 0.896. So you get 142.76 of AbbVie share, right? So you add that to 124.1. One of these days, they're gonna, okay, and then you add it to 124.1, and you get 270 bucks. So right now, this is what the deal is worth. It could change with every dollar that AbbVie moves up or down. It'll affect the deal price by around $2.70, and every change in the exchange rate, it's going to affect it. So it has like multiple variables that you need to take account, but that's basically what the deal price is, and you can see that it's trading far below the deal price, right? Why is it trading far below the deal price? Well, basically, before the deal gets done, there's always going to be some kind of percentage there's a gap between the final price and the current price, because basically there's interest of holding that position, right? So even if it's 100% certainty, and nothing is 100% certainty, basically just to hold a stock for that long, because you can actually put that in the bank and get interest, that it's gonna actually trade at a discount to the final price, right? It's like, kind of think of it as a bond. But there's also risk that something crazy could happen and the deal could actually not go through. So there's extra premium built into it. So my thinking was, and I don't, and this is where it kind of, I could probably use a financial analyst to let me know, but I don't know when the deal's going to be. I don't know what that premium should be, but I was kind of thinking like, it's going to be between like 96 and 98% was what I was thinking. So let's just multiply by 97, right? So my thinking is it should trade around 260 when this deal gets done, right? That's why I wanted to short the 60s, because I don't think it's going to go too much higher, and this is just me speculating, than this price. And since the price should be higher, the chances of it going down is less as well. So you guys know how I do my tree, which is no deal. I give it like 10%, right? Deal or nothing happens this week, or basically they get an extension, so the stock price stays the same. Maybe that's 40%, and then deal gets done, 50%, right? So this is kind of how I was doing it. So the way I do this is buy puts, cheap, right? So I'll show you guys that a little later. Basically, after doing this butterfly, basically if nothing happens, I most likely will be even or lose little, right? If the deal gets done, my thinking is I'm gonna, get up to 200%. So I should make between 100% and 200%. And of course, this is my analysis, because I'm thinking it's gonna go to 260. So if it goes to 260, the calls I bought, the 250 calls, become $10, and everything else become worthless. And if I bought that butterfly for $350 and then now it becomes $10, basically I made 200%. But give or take, if it goes to 257.50 or 262.50, I'll still make 100% return, right? So my range of actually getting this return is having the stock trade stock will need to trade between 257.50 to 262.50 for me to actually get 100% to 200%. If it trades 260, I'm going to get 200%. And this is basically in the next 4 days, right, before July expiration ends. So I like this trade, so I put this on, right? Because if you do like a decision tree and you multiply by the outcome, basically it looks good, right? Maybe there is a slight chance it can go to 250, and then you lose $3.50, which is 100%, which could happen, but I give that, maybe like less than 5% chance. So just so you guys know, that's my premise, right? Now, one of the things that's really important is once you actually make all this money, because I made quite a bit on Shire since I've been trading. So let me see. So I'm up $4,000. So I probably made slightly over $30,000 on Shire, right? Maybe 33 or something, 32 so far. So I'm willing to put up another, out of the 33, I'm willing to put up, so what's 350 times 40? That's how much it cost me, right? And that's how much I can lose. 14,000 of that $33,000, and I'm gonna roll the dice again for this week, right? So I'm basically taking you know, whatever, 14,000 of the 32,000, 33,000 I made, and I'm rolling it into this trade, which is the 250, 260, 270 butterfly. Now you see all these puts that I bought? I bought these for 60, let's see what price. I bought these for 75 cents and 70 cents, right? The reason I bought these, and it's really important to own puts, is I don't, if for whatever reason, and there's a very low chance, but if for whatever the deal goes off, I don't want to lose everything I made. I'm going to lose something, but I don't want to lose everything, right? So let me look at the risk chart right here. So if you look at my trading right now, right, this risk chart, and this is 10% up or down. Let's do 25% up or down. Next 8 days. Basically, you see how my downside is a lot better now, right? So if it does on the last day, I could still get hurt. But most of the time, if it happens today, I won't get hurt. In fact, if this stock goes down to like 220 again, I'm going to make $45,000 because I bought these puts, right? And I only paid basically 75 cents for it 35 times. So I spent $2,300 of the gains I made and bought protection just so if this deal goes awry, something implodes, basically that it's going to, if the stock goes to 220, I'm going to actually make 45,000. So I'm kind of trying to lock in the profit as much as possible and then lock in the downside, right? So because I made that money. And then I'm going to invest part of the money I made into another trade that I think I can, where I think I can triple my money and get 200% return on a trade that I think is the most likely scenario. So I feel like there's 50% chance that the stock's going to trade between 257.50 and 262.50 by this expiration, and if it does, I'm going to make between 100 and 200%. Right? That's kind of what I'm thinking. That's why I'm doing it. It's important for you guys to actually do this math a lot more now than before. Whereas before it wasn't as important, right? But now that you know what the price is, it's in your whole, this stock, Shire, is going to move very closely with ADV. So if ADV starts going up or down, it's actually going to move in conjunction with it. Plus the volatility should be almost identical, right? So you see how Shire vol is around 24, ADV vol should be, yeah, so it's going to be right around here. It's going to be, Shire's going to be a little less because it's 90% of ADV, right? You guys don't have to know all this stuff. It's just something you learn a little bit at a time. A lot of times, just so you guys know, I did this butterfly, but it would not be my #1 choice, right? Just so you guys know, it's not my #1 choice. If I was trading on the floor, what I would be doing is I would be buying the July 50 line. I would buy a ton of these, right? And I would short the July 60 straddle. This straddle this morning was like $14, right? I would have shorted the crap out of this line, knowing that nobody wants to own the July 60s because it's the most likely place for the stock to be at expiration. So I would have sold this and I would have bought extra of this, right? But I don't have the margin to do that. If you guys do have the margin, basically selling the July 60 straddle and buying this July 50 put is the way to go. And basically what I would have done is bought some of the July 70 calls, right? Because you never know. So there's like, I think there's like 1 to 2% chance that somebody comes in and trumps the bid that they already agreed to. But whatever, something just traded. Okay, it looks like they all traded for 170 just now. So it's really important to have this software. And you can get all the order flow information right there, right? So I just saw the trade, I clicked on it, and I saw somebody bought it for 170, right? So just going back to my original, so what I'm trying to do is actually buy more of these. So in this butterfly, what I'm not telling you is I have an extra call spread, July 60, 70 call spread, extra, and also I'm buying extra of these. So this 20-cent bid is actually me, Let me see if I can show you guys. Yeah, you see this 20-cent bid? I got filled on 7 of them already, but for 25 cents, and then I lowered it to 20 just because there were a lot on the offer. Not sure if I should have, but I bought 7 of these for 25 cents, and then yeah, you see, yeah, you see the 7 for 25, and then you can see that I'm buying extra because just in case something crazy happens and somebody bids higher. So I'm also I'm trying to leg into this butterfly a little bit, but I don't know how, I need to own this first, because if I'm short too, I'll basically get margin call, right? So I have all these other ancillary factors and variables that I need to take into account now that I have a Reg T account, which I didn't have to do before. I would have made a lot more money if I was on the floor, because I would just hammer these straddle from the get-go. So I would have probably sold 100 of these straddle, maybe 200, bought like 300-400 of these July 50 puts, and then bought these July 70 calls, right? And basically would have been short this straddle, but it is what it is. Essentially, by doing the butterfly, I'm doing the exact same thing, but you have less flexibility. And I can go into details, but it's better just to, I can cover it on another day. But anyway, so that's what I have right now. I'm hoping it finishes around 260. I think before I did some kind of ratio spread, like you guys know. But remember, I was buying the downside puts and trying to sell these deep calls. And essentially, I was doing like a ratio spread where I was selling the July 40s twice, and I bought like 30 of the July 260s, right? Now that situations change, I'm changing, I'm revising it. So now it's 260. So I have all these alerts on that I put up just so I can keep track. I have alerts in AdVeep and stuff like that. So it's up a little bit, so that's pretty good. As for all my other stocks, I have IGT. I'm trying to sell these August calls for 95 and 90. I sold 25 for 95. I'm trying to sell 25 more for 90, and basically they'll go off against this position. And since I'm not going to make any money really on this takeover, I'm just going to have to sell calls against it and kind of buy right it or time spread it, because it's going to take them a while to get all the approval. So I'm just going to time spread it and try to make some money there. And LO, basically, I got out of everything. So I sold this, and then I turned this into a call spread. And RAI, I actually like this spread because I think they paid less than what people were thinking. So I think there's an uptick. So I have this call spread, right, that I put on because I thought RAI could be a takeover target from British American Tobacco, which, now it's not going to happen. So basically, I have this call spread on, and I can do whatever afterwards. But I think there's upside in Reynolds once they make this announcement. Am I missing anything? So I think those are all my deal stocks. Let me go back to my trading. So out of this 14,000 that I'm up today, you can see this Apple and this Honeywell. Actually, this Honeywell is a little overinflated because I bought extra. But anyway, basically about 50, so 20%, 21. About 5,700 of this gain today is from TraderMinute guys. Those guys are pretty awesome. I talked to you guys about them for a while. Let me actually, so basically, if you go to TraderMinute, and their account is like at 40,000 right now, and they started with 3,000, and they do it every 3 months. They're starting a new one tomorrow. So it's actually a good time to sign up and get 1 free month. But type in live 569 and you guys get 1 month free. Now, people ask me, do we get compensated for actually referring people to TraderMinute? Basically, the answer is yes. The way it's kind of like referral agreement, which like pretty much the industry has all over the place, and you refer people to their site, and if people happens to join, basically you get some kickback. But one thing I did want to tell you guys is that I personally would not be putting on this trade or recommending it unless I believed in it. So as you can see, like the proof is in the pudding, right? It's one thing to say, hey guys, you guys should follow these guys because they're good. It's another thing to actually follow them, and I'm doing that now. I'm kind of, you know, if I knew that he was going to do 40 this time around, I would have pretty much been all in. But you know, I didn't realize that until later. And as you guys know, previously they haven't done that well, right? They in fact like lost all of it like a couple of times. So it wasn't like I had full confidence, but I did love his analysis. So his analysis, in my opinion, was spot on. So that's why I was following him, because his analysis was great. He was just buying naked calls, which is a very tough thing to do, and he was very successful at it. And now, you know, he's turned 3,000 into 40, which to me, now it explains the other 2 times he didn't get anything, because if you have one of those things that hit, basically it overcomes anything else for the, you know, it's enough money challenge for the next 10 challenges. But I feel like he has good upside. He has good fundamental and technical, basically the reasoning. He has good option knowledge in terms of buying the right options. I feel like he's right on. He doesn't overpay. He does it by return and not by volatility. But his analysis is very, very right on in terms of what he thinks. And then the rest of these are just what I have. So the fact that, you know, I pretty much 5,100, 51, like 4,700 of this is from TraderMinute, is great. And as you can see, I'm having a pretty good day. But just so you guys know, 2 days ago, my account was, when the futures was down because of all the banking situation in Portugal, it was below 100. So I had a crazy ride, but I'm hoping that it goes higher from here. But as you can see with options, you know, you can make money very quickly. It's something that I've been telling people for a very long time. So even though you're struggling, and I know sometimes it seems brutal, when you actually start gaining some traction in options, you can make money very quickly. And the fact that my account, you know, has this big swing is an indication, and hopefully you guys can see how it goes. Another thing that you guys have to understand is, you know, I've been in many deal stocks. So like I can tell you, like, you know, L'Oreal, IGT, like losers, even TRW seemed like almost kind of a loser when I put it on. So there's like a bunch of stuff that I put on, loser, 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 and then I hit in Shire, and basically it overcomes that, right? Because you made 33,000, and the other ones you lose like 6,000 or 8,000. So you know when I put these on, I fully expect to win every one of them, even though I know mathematically that's not going to happen. But it's something that I shoot for. And when you can get on a streak, like if you could have hit like 2 or 3 in a row, basically that's how you can make your account explode, right? So you just have to understand what you're putting on in terms of risk. The TRW is my next one. They're getting a bid from some German company between 11 and 12 billion. So I started this position. Let me just cover it real quick. Basically, I like the upside, but I didn't want to, since they're at the beginning stages, I wanted to short the at the monies, which was the fattest premium, and basically I want to somehow pay for this a little bit. So I have this spread on right now. I'll see how it goes. So this would be my next candidate. I have a bunch of other stocks that I think are candidates, but right now I have no more money. I'm maxed out. So even though my trading account grew to 146, I pretty much have no cash to do anything until I start selling and stuff like that. So it's going to take me a little time to do. Sorry for all the long-windedness, but I thought it was pretty important to cover. And you know, looks like in the last month, you I'm up 17, and maybe with today I'll be up 30. In the last 3 months, I'm up 35, and with today maybe I'll be up 50, and so forth. So I had this down period. I can still have down periods, as you can see in my P&L. It's pretty crazy, but I'm hoping for this to get to a certain amount. Once it gets to like 200 and 300 and 400, you just become better and better, because you can make a $15,000 bet trying to make like $50,000, and if you lost it, it wouldn't be the end of the world, right? So that's kind of where I'm at. Let me kind of cover the earnings. So Goldman has earnings. Basically tomorrow before opens. Let me actually go through all the stats. I'll go through them quickly because I'm running a little late. Basically, the options are implying a 2.3% move. Stocks moved an average of 1.6%. My general thinking with all these bank stocks, JP Morgan is also gonna announced they're on the 14th percentile. JP Morgan implying a 2.2% move, moved an average of 1%. I think the bars are set very low for all the banks, so I'm kind of hoping they have good earnings. Citigroup had good earnings. Wells Fargo had average earnings. My thinking is that if these guys start reporting good earnings, the market could have a decent up move, right? Johnson & Johnson implying a 1.6% move, moved an average of 0.8%. It's at the bottom 2 percentile. So basically, everyone already knows, I think, what these earnings are going to be, or at least they're implying. YHOO, 3.2% implied move, moved an average of 2.1%. Intel is 3.2%, moved an average of 2.1%. And then YHOO is next, which is implying a 3.1% move and moved an average of 6.6%. This one is the most interesting to me, just because I think people are buying in partly due to Alibaba. And if I look at the chart, I guess the question is the news going to be good enough to pop it out of this range, which is 37 bucks, right? So from the stats, looks like people are buying the July 37 calls and the August 42 call. Hold on. Yeah, I'm not sure about this. This could be a call spread, so they might have sold the spread. But so essentially, it looks like the overall order flow is bullish in YHOO, and so is, let me see the charts. Yeah, I mean, it's in a range. Maybe it'll pull out, so we'll see how that goes. But hope your trading goes well. I am personally very happy, but I know myself that things could change very quickly. And to me, what's happened is the past, and now you just got to move on. So now, I'm going to try to figure out how to increase this. And as you can see, as my account gets bigger, I can be more and more aggressive, right? I would have never put this position on, and see how now my P&L is up 3,500. So this trading P&L started down 6,000. Now it's up 4,000, right? So it's a $10,000 swing on this P&L alone, because my assessment was that 60 strike is not the strike to own, right? It's actually the strike to short, and you want to own the 50s. So once I realized that you want to own the 50s and short the 260s, you kind of put the percentages on and you put it in there. So let me actually see, because I have other butterflies working. So see, I'm trying to buy more for 315, that same butterfly. Yeah, but that butterfly is worth 450 now. So yeah, so essentially, a lot of the stuff that I'm doing is not rocket science. As you can see, I didn't even have a finance degree. I don't have a, I don't have like any kind of really heavy financial background. I did do a lot of trading, and I like to read, right? So it's a simple tree diagram. You assess percentages to it, and then you actually put an outcome. It's something that anyone could do, right? 10%, and then you actually put in the outcome. If you buy cheap puts, I basically paid, you know, about $2,300 buy puts, right? So I'm gonna make $2,300 less or lose $2,300 more than whatever I do. If nothing happens, basically I lose a little, or the maximum I can lose is basically like 12 to 14K that I put on that trade, plus this. And then if things work out, which I give 50% that's gonna trade between these two ranges, that I'm gonna make, you know, 100 to 200%. Now it can actually go beyond it, but I still will do okay just because I have that call spread too, right? So if I look at my risk right now, basically beyond 270. Looks like I will be losing. So what I could do is I can try to buy some of these, right? So as I'm looking at this, I'm always adjusting by looking at the spreads, right? So I see this, when's the last one? 35 cents. So I'm actually gonna buy 10 for 35. Let me do 30. See, this is my bid now, and I'll see how it goes. But if I bought 10 here, so let's say I bought 10 more, right? This is why I love this software, do simulation, because you don't have too much time, right? You don't have time to like mess around. Let's say you put 10, you're like, oh, the 10 isn't the right one. You know, maybe I need to buy like the 65s, 5 of them. Right? See how it's like getting better, right? So I just keep messing around with it until I feel comfortable. But in the end, I'm okay with my position right now, and I'll see how it goes, right? Because you know, if I feel like let's say AbbVie goes up a lot, right? See, AbbVie is turned positive. That's why Shire stock is up so much, right? So I'm going to do 55.50. So every dollar AbbVie goes up, the Shire price goes up by like 270. So you guys will have to account for it. So as it goes up, naturally, so what's my take on all that is that people like the deal, right? And the deal looks like it's going to go through, so I might be apt to buy more calls, right? I might actually buy some of these back, right, for 190, just in case it goes way beyond 260, right? So if I'm wrong, right, I can buy some of this and give up some of that 200% return. Let's say you cut off 25% and you just buy these back. But right now I'm just kind of, you know, I'm not going to do anything. I might buy some of the 70s, or maybe try to buy some of these. You know, maybe I'll buy 5 of these for 50, right? Now, before I do that, let's say I put in a 5 lot here, simulation, and then you can see where my P&L is, right? So at 70, no matter what, it's not going to be good because I'm long the 70s, right? So I have a butterfly, so 70 is my dead spot. So my guess is it's not going to go to 70 is what my premise is. But I wouldn't mind owning some of these. So let me see what I have here. Of these, just to make sure that, you know, I'm okay with it. So people are paying 35. I'm going to see if I can get some for 30, see how it goes. Hope your trading goes well. I know this thing ran about 45 minutes, but it just had a lot to cover in Shire, and I felt like if I cut it short, I wasn't really doing it justice, right? So basically, I'm kind of trying to lock in the money, right, the 33,000, but I'm still willing to invest like another 15,000 of it on new trades that I think is going to happen in the next week, so this week. So I bought more puts just to make sure, and then I have this spread on. So that's it. I hope your trading goes well, and I'll talk to you guys on Wednesday. Take care.